All right, guys, welcome back to another Dividend Happy Hour. It has been a few weeks, but I am so excited to be back in the saddle with you guys. Happy Friday. I hope everyone had a fantastic Thanksgiving, at least those of us who are here in the U.S. and celebrated. Over here in my neck of the woods, it was pretty uneventful. I think, Pat, in the chat, I saw you ask, how was the first Thanksgiving as a dad? Pretty uneventful, pretty good. Let's see, what can I tell you about it? My wife did a lot of baking yesterday, which was awesome. My wife, I'm not like a big desserts guy, usually not a big sweets guy, but oh my gosh, chocolate chip cookies are like, well, really cookies in general are one of my weaknesses. I'm powerless before cookies, and that is amplified by like a billion degrees when it comes to my wife's cookies. I think she, and I'm not even exaggerating, I think she might just make the world's best chocolate chip cookies. So she did a lot of baking yesterday. That was my favorite part of the day. And just, being able to hang out with our little turkey. But otherwise, we didn't really do like a special Thanksgiving dinner. We made homemade pizza yesterday, which I honestly, truth be told, I would take that any day over your traditional, Thanksgiving dinner. The turkey and the stuffing and the gravy and the mashed potatoes doesn't really do it for me as much as pizza would, or honestly as like burgers would. I'm such like a 12-year-old with my palate. But anyway, once again, I hope everyone had a great holiday. Like I said, it's been a few weeks since we've streamed. I was out of town. I think the in-laws were in town as well during one week. So I've missed you guys. I've missed doing this, and I've been looking forward to this all day. I want to tell you guys too, today for Black Friday, we went down to the Strip. We went down to the new like Boulevard shops, which are kind of right across from the Aria, like Center Strip. My wife works over there, so we popped into her work at Lululemon there. We went over to Caesar's Palace and walked through the Forum shops for a few hours. And let me tell you, the Strip was jam-packed. Caesar's Palace was crazy. The Forum shops was just a sea of people. And what's really cool, so that's a Simon Properties Group, ticker symbol SPG. The Forum shops they have a few different. Simon Property Group actually has a few different locations around Vegas, but the Forum shops is one of them. And they were giving out, I wish I had my wallet on me because I'd show you, but they were giving out, literally just handing out $10 Visa gift cards. And they were just saying, yeah, we want you to shop. So here's a $10 gift card. They gave one to me. They gave one to my wife when we first walked in. And then kind of as we were getting ready to leave on the whole other side of the mall, someone else gave us two more $10 gift cards. So in total, we got actually the first time we just got one. So in total, we got $30. And we could spend it anywhere. It's a normal Visa gift card. You didn't even have to spend it right there at the Forum shops. It could be used anywhere. So could be Chipotle money, could be In-N-Out money. But that was really cool. Let me see here. What's going on with you guys? Looks like there's, about 90 of us here in the chat. I see my man Teeps. Thank you, Teeps, for the shout out. Hit that like button. Okay, so before we continue on though, guys, we got to kick this thing off the best way we know how. Grab whatever it is you're sipping on. And, interestingly enough, I got myself a little cup of Joe here with my Snoop Dogg mug, the DOGG. But anyway, guys, cheers. Here's to you guys. Happy belated Thanksgiving. Happy Black Friday. And also here's to the dividends. Here's to the pursuit of that sweet cash flow, because that's really what's bringing us together tonight. And I appreciate you guys on a holiday weekend of all weekends, setting some time aside to hang out with your old pal Ryan. So cheers. Here's to you guys. Ooh, that's good. That's good. I don't usually drink coffee this late, but it just something warm sounded really good. It's pretty cozy in the house. We've got the Christmas tree going. The lights are on. It's dark. It's kind of cold outside. So just a nice cup of Joe really hit the spot. But I have a few questions for you guys. Drop them here in the chat. Number one, I want to know, it was a short week, but we did have a little bit of action this week. Number one, I want to know, what did you buy this week? Which stocks did you add to your portfolio? Let me know about your shopping spree. I'm sure a lot of you guys didn't do your Black Friday shopping at the Forum shops or anywhere else. I'm sure you did them in the stock market. So let me know what you picked up. That's number one. Number two, what are you sipping on? What did you bring to drink to the Dividend Happy Hour? Let me know about that in the chat. Number three, did anything cool happen in your guys' portfolio this week? Any new milestones, maybe some all-time highs? I actually have a couple of things in the portfolio to show you in just a moment. So let me know what happened in your guys' portfolio this week as well. And number four, I want to know if we have any first-timers here in the live stream. In case this is your first time tuning into the Dividend Happy Hour, we are 154 episodes deep. And typically we do this live stream every Friday night. On a normal week during a normal time, we're doing it Friday nights, starting at 5 p.m. Pacific time, 8 p.m. Eastern time. I've been neglectful. I've been negligent these past few weeks. And once again, I do apologize. It hurts me to not be able to stream with you guys because I love doing it. Sometimes though, you can't make it happen. But on a normal week, we're streaming every Friday night from starting at 5 p.m. Pacific time, 8 p.m. Eastern time. And if this is your first time, welcome aboard. But anyway, let me go through the chat and see what you guys have to say. Looks like there's now about 115 of us. So stoked about that. Let's see what we got here. What do we got? And also, if you have any investing questions, drop them in the chat. If you have any stocks that you want to look up, drop them in the chat and we can go through them here as well. Okay, so first and foremost, no, Stan, I did not see that yet. Let me see if I can pull that up, though. Bear with me for just a moment. Let me pull up your Twitter. Bear with me, guys. There's Craig. There's the guy, the one and only. Okay, is that it? No, that's not the... Sorry, guys. I'll go through... let me just... Oh, there we go. Oh, your estimate. Okay, so yeah, I have the right thing pulled up. We'll take a look at that in a moment. Let's see. Felix has a good question. Let's just answer this one right now. So, this is... And I'm actually going to screenshot this because I think this is probably worth exploring in a future newsletter. So truth be told, Felix, and I've talked about this before, but I don't really think the two are mutually exclusive. I think that dividends and growth are typically looked at being on opposite ends of the spectrum. And I think that there's this misconception, I think it's a misconception, that you can't have both at the same time. But I personally don't agree with that. And I don't subscribe to that thought. I think in my portfolio, I've got a really solid balance of companies that both pay a dividend and are also growing. And a few examples of those are going to be stocks like Visa. I think Snap-on's in there. I think Lowe's is in there. I think Williams Sonoma. I think Clear Secure is in there. I even think Procter & Gamble's in there, albeit at a slower, more steady rate. But all of that's to say, I think that the two kind of go hand in hand. And I'll explain that a little bit more. So if you think about where a dividend comes from, a dividend comes out of a company's free cash flow, right? The only way that they can pay a dividend is if they are generating free cash flow. And the only way that they're going to be able to generate free cash flow is if they are, bringing in sales, if they are bringing in profits, net income, all that jazz. That's the only way they can even have free cash flow to pay out a dividend in the first place. Now, with that said, for a company to be able to pay a growing dividend, which is what I try and invest in companies that are growing their dividends over time. Well, the only way that a company can actually grow its dividend is if it's also growing its free cash flow, if it's also growing its net income, if it's also growing its revenue. It can't really afford to have a growing dividend over an extended period of time if those other things are also not occurring. So, once again, I think the two kind of go hand in hand, and I wouldn't look at a dividend stock as a dividend stock as being something that's going to cause you to miss out on growth. Sometimes that's true, but that's not because sometimes, you don't quite get the growth with certain dividend stocks, but that's not exclusive to dividend stocks. That's true with stocks, regardless of whether or not they pay a dividend. There's good companies out there and there's bad companies out there. And at the end of the day, I'm trying to invest in good companies that are growing, but also just happen to pay a dividend. Like that's the presence of a dividend is something that's important to me. In the same way that seeing growing sales and growing free cash flow is also important to me. Hopefully that makes sense. I think that if I kept going, I'd probably start talking in circles, and I don't want to do that. But hopefully that makes sense. But getting back to your guys's comments here, it looks like Shannon picked up a few things here. VNQ, SCHD, VTI. Very nice. Looks like William here. More SCHD in Realty Income. Nice. Fishy Man sipping a Miller Lite. Finally got over 20K this week in the portfolio. Great job. Only bought SCHD and SCHG. Nice pickups. Luis picked up some crypto. They are 25% on sale. Nice. Korean Cardboard with a nice little milestone hit $50,000 in the portfolio. Great job, my friend. Halfway to that six-figure mark, and you'll be there in no time. Let's see, Chris. I only bought VOO and Weeble. I hate buying on green days. I have cash reserved. Well, good stuff, man. Yeah, and we had quite a few green days this week. Let's see, Pat, nice pickups, 230 shares of Vici. Holy cow. Around 10 shares of SCHD, celebrating with a Coke Zero. What a way to celebrate. Good job. There we go. Look at this, guys. Stock Tracker hit $100,000 today. Congratulations on the milestone, man. That's incredible. The six-figure mark. Good job. Good job. Holy cow, Sir Dudebro, man. That is heavy, man. I did reach a new one-day record on Monday. Okay, well, that's good. And then got laid off from my job. Dude, I am incredibly sorry. I almost don't even know how to respond to that other than just to say I'm sorry. And what's the next move? I'm curious. What are you going to do from here? What's the plan? Let me know in the chat, or let us know in the chat. I'm worried about that. Let's see there. We got Anders picking up some SGOV. Nice. Now I got my full 1 year expenses. Okay, nice. Full 1 year expenses. So is that's like an emergency fund? You've got 1 year's worth of expenses set aside in SGOV? If so, that's incredible. Invested $600 into Mid-America Apartments, great REIT, $1,000 extra against principal on house. Cool. Nice. Oh, look at that. Hit $500,000 in assets. Not bad at all. Indeed, in less than 6 years. And as usual, Diet Coke. Man, good job. Great week for you. That's incredible. Pat says $675 in dividends coming on the 1st of December from Enbridge. Also added ADP this week. Nice. Yeah. Good time to pick up some ADP, I think. Let's see. Daily MLB picked up some AHR. Which one is that? Off the top of my head, I'm not familiar with AHR. American Healthcare REIT. Okay, nice. Very cool. Vasco says, just loaded up my Vici position. Happy to start a subscription in Snowball. Nice. And by the way, guys, until December 3rd, Snowball Analytics is doing a 30% off sale for like Black Friday. So if you guys have ever wanted to sign up, want a sweet discount, it's 30% off right now. There's a link to Snowball Analytics in the description of the video as well. And I'll show it to you guys here just to give you a sneak peek on what the platform looks like in case you've never seen it. But I highly recommend it. It's my favorite portfolio tracker out there. And also don't let me forget to show you Snowball, because I want to show you just where the portfolio is at. A couple cool things happened this week. And I don't want to forget to clue you in. Yeah, Tim, new position in Vici. Nice time to buy it, I think. Yeah, there you go. Some other good pickups there, it looks like, as well. Target, Home Depot. Yeah, Target's a really interesting one. I don't quite know what to make of it because it's just so cheap right now. It's so cheap. I don't know. I still don't know if it's worth buying. Home Depot, JP Morgan, Texas Instruments, Union Pacific. Nice. Good stuff. Good stuff. Yeah, this is a good question. What are your thoughts on Verizon? This is a pretty quick one. I think if you are looking for, like, if you're just looking for stable growing income, it's not growing super fast, but if you're just looking for like a stable passive income stream, I think Verizon is very good for that. It's not a company I used to own Verizon. I used to own both AT&T and Verizon. But these days, hold on, my laptop's not charging. There we go. Weird. Sorry, I just noticed that. I didn't want it to die. What in the world? Hey. It's weird. Like when okay. Oh my goodness. Okay, whatever. We're just gonna rock with it. I used to own Verizon and AT&T back in the day, but it just got to a point where I feel more comfortable owning companies that have less debt than those do. Those are very capital intensive companies. And I just feel more comfortable, putting my money elsewhere. In hindsight, I should have held on to AT&T because I would have generated a really solid return from it. It's really seen a crazy run up in share price this year. But and the thing about the debt too, sorry, while we're still on the subject, the thing about the debt, if you look at how the debt schedule is, I mean, that debt is so long-term. Like in AT&T's case, I think some of that debt doesn't come due until like the turn of the century or something crazy like that. So a long, long time. So it's really not horrible, but still it does pose a certain risk. Okay, let's keep going though. Rourke picked up 5K each of Vici, AMT, nice, and Home Depot. Good stuff. Good stuff. Yeah, Stan, or Craig, it's the pin comment, right? I have it pulled up. We'll check it out in just a moment. I just want to get caught up here in the chat. Okay, Joey bought some Deere, Waste Management, Coca-Cola, SCHD, and opened a new position on Professor G's recommended RCAT. RCAT. What is that? Red Cat. Red Cat. What is this one? Huh. Company also provides first-person view video goggles. Interesting. Okay, let's keep going. Let's see. Yeah, here's the record for Sir Dude Broman, 2,900. Very nice. Hold on, guys. Let me figure out this laptop thing. I might have to. There we go. Okay. So weird. I think we're good now, though. Anyway, Sir Dudeberman reached a one-day record of about $2,900, a $2,900 gain. Dude, that's awesome. $2,900 without having to lift a finger just in one day. Great job. Seth here hit 25K in the portfolio. Nice. Good job, Seth. And only been buying Vici since it's under $29. Yeah, I don't blame you. I think it's a really good time to buy Vici. Midway's buying some of that as well with some Hess midstream. Darren here buying Walmart and started a new position in Netflix. Okay, nice. Very nice. Yeah, man also picked up some ADP. Good stuff. Sysum just hit $900 in annual dividend income. Nice move. Or nice little milestone, I should say. Oh, that's cool. Patrick says, I now have received more dividends in energy transfer than I invested. I don't drip. That's crazy. Holy cow. Let's see. Let's keep going. Sorry, guys. I'm just scrolling down. Okay, Chris's first time in the live stream. I'm about 5-6 minutes behind in the chat. So, gonna keep going. Yeah. Let's see. Okay. Don't worry, Ryan. I have a decent emergency fund of 17K, so I'll be good for a while, guys and gals. Okay, good. I'm glad. I'm glad. But you know what? Obviously, like, try not to use up all of that emergency fund. You know, I know that's what it's there for, and thank goodness that you have that. But hopefully you can get something. Yeah, my next goal is to get another job with the schools or something. Okay, cool. Well, I'm good you got a plan, man. Keep me posted too. Keep me posted on what ends up happening. Oh, nice. Trying out Snowball through your affiliate link. It's awesome. Good. I'm glad to hear that. Can we look at General Mills? Yes. Or that's not, that's Goldman Sachs, not General Mills. Yeah. We can definitely do that. Definitely do that. Okay. Okay, I'm just getting caught up here. All right. Yeah, RCAT high risk. Ooh, is Procter and Gamble a buy? I kind of think it is. I'll be talking about this in my next video coming out in a couple of days. But yeah, I think I'm going to be working Procter and Gamble back into the buying rotation here pretty soon. Okay. Oh, Adam, all the way in Tokyo. Nice. Well, thanks for tuning in, man. I hope you guys are having a fun trip over there. Okay, guys. So we need to look at Craig's SCHD estimate. So let's go over, got to add the screen. Okay, so here's Craig's Twitter. And by the way, guys, if you're on Twitter or X, whatever you want to call it, follow Craig. SCHD ETF is his handle. And it looks like, whoops, it looks like Here's the official SCHD stand Q4 SCHD dividend estimate. Okay, so after running the numbers, his estimate is basically 26.82 cents per share, which would mean a 1.4% increase compared to last year's Q4 payout, in a year-to-date increase, or an annual increase, since this is the Q4 payment, of 4.35%. This would lift the 12-month, I'm like dyslexic tonight. I do not know what's going on. This would lift the 12-month trailing dividend to $1.03, $1.03.76 to what? See, I don't know what's going on with me, guys. Ryan, come on. $1.03.76 from $1.03.39. Okay. If this estimate is correct, it would be the second highest quarterly payout in SCHD's history. Okay. Well, nice, man. We'll see. So ex-dividend day is the 10th. When do they actually announce what the payment's going to be? Let's see. I'm sure. So if the payday is the 15th, then maybe they'll announce it a couple days beforehand, or a few days. That night? No. The evening before the ex-dividend date. Okay. Cool. So we should know probably on the 9th. Okay. Nice. Okay, guys, let's jump over to Snowball. I want to show you before I forget. And nice. Looks like there's 180 of us in the stream. I think this is like the most people we've had in a stream for a while. It's been a while since we've broken 200 people, but I'm happy to see all of you guys here. Thank you so much for tuning in. Really appreciate you guys hanging out with me tonight. Yeah, Justin, that's a good question about the S&P. We'll check that out. Okay, guys, so we are over here looking at Snowball Analytics, which once again, they're doing a 30% off sale. There should be a link to it in the description of this video. I'll also include a link in the pinned comment as well once we're done with the stream. And also in the pinned comment, I'll include a link to where you can actually see my full entire portfolio here on Snowball Analytics. So once the stream ends, if you guys want to check out my full portfolio, just come back to the video and check out the pinned comment. I'll put it right there. I should have done it beforehand. But number one, the first thing I wanted to show you guys is right now the portfolio is sitting at an all-time high. So right now it's valued at $117,868. Pretty nice. I mean, let's see if we can go over to the growth and just see like what's been going on this week. And this is my combined portfolio, by the way. This is my taxable account and also my Roth IRA. So looks like here just in the last week, we are up almost 2% just this week. And we started the week a bit down. Actually, the 23rd would have been, or the 24th would have been Monday. 7, 6, 5, 4. So Monday we were down a little bit, but the rest of the week's just been on fire, as you guys know. So really, really solid week. I wish it showed the portfolio value. It will right here. So if we hide this for just a moment, and it should show the portfolio value. So we started off the week 115K, jumped up a couple thousand just this week. Love to see that. So that's number one, all-time highs. Let's see if maybe we can get to, we'll see what happens the rest of this year, but let's see if we can get to like 120K in the portfolio. That would be pretty crazy. Because I think we started off the year somewhere in the 80s. So that'd be a pretty nice gain. So that was number one. Number two, I want to show you guys where the annual dividend income is sitting at. And I'm sure a lot of you guys already know this, but my goal by the end of 2025 for this next month is to hit $4,000 in projected annual income. And based on this right here, so looking forward to the next 12 months from now, I'm estimated to bring in $3,992. We're less than $10 away. Actually, we're less than $8 away. So that's 1 year ahead, which includes this next month in December, which is going to be a crazy month of dividends, over $400. Now, with that, if we switch the view and look at 2026's estimate, look at this. Less than $1 away, $3,999.27. That is 73 cents away from hitting that 4K mark. So that's pretty exciting. I mean, this upcoming week, we're definitely going to hit it. And actually on Blossom, On Blossom, it showed a different estimate. On Blossom, it actually showed my projected annual income at $4,060. So according to that, we already passed it, but I want to use the more conservative number. I want to go with this. I would show it to you on my portfolio tracking spreadsheet, but the data is not loading quite right over there. I'm sure some of you guys have noticed that. But anyway, I thought this was really cool. We're almost at that goal, and I really need to think. I really need to think hard about what what I want to shoot for in 2026 as far as the projected income goal. Um, I don't remember exactly. I think I started at 3,058 or something like that going into this year. So we've added about $1,000 in projected income just this year. And I think that'd be really cool if we did the same thing next year. I'm sure we will. Um, so we'll see how it goes. But kind of while we're on the subject, I do want to ask you guys. Maybe it's too soon because we still have another month, but I do want to ask you guys. I mean, are you already game planning for 2026? If so, do you have off the top of your head any big investing goals that you want to hit in this upcoming year, or maybe even just the rest of this year? Either or. I'd be curious to hear what you guys have. What you guys have in your sights. Going into 2026 and also for 2026. Let me know. Um, there we go. Joey said, you challenged me to hit 100K by year end on the last deep end. It's going to be close, and we'll definitely need the market to go green and help me out. Yeah, no, well, great job, Joey. I mean, way to challenge yourself there. And definitely, obviously, keep me posted. I know you will, but yeah, that's the tough thing about setting those. And I've felt this too. That's the tough thing about setting portfolio value goals is it's really there's so much that's outside of your control, and I think that's partly why. I think that's also partly why I'm a bit more focused on the income goal, because that is so much more within your control. Because that's really just comes down to, how much are you able to contribute. Plus also reinvestments and dividend increases, play a role in that. The dividend raises you don't have any control over, but some of that other stuff you do. So that's why I tend to focus more on that type of goal. It's a bit, you know, like I said, it's more controllable. Okay, so Kevin here says, my first time here. I'm new to, first of all, welcome aboard. Stoked to see you in the live stream. I'm new to investing. Great job. And I've been following your videos. I'm looking to start getting some dividend stocks and ETFs. I started with 40 shares of SCHD. What else do you recommend? Well, I think that's a great start. Truth be told, I don't really have any specific recommendations for you. I'm sure if you just continue to watch the videos, you'll get some other ideas. I will say, personally speaking, though, and obviously, Kevin, I don't know about your situation. I don't know how old you are. I don't know your time horizon. I don't know any of that stuff. But I will say, at least personally speaking, um, I found something like the S&P 500, or even something like SCHG or VTI, something like that. I think that another fund like that would really pair well with something like SCHD. I think they have kind of different things to offer. And because of that, I think they complement each other really well. So, if you're looking for some other place to look, maybe look for something that will offer that's maybe not as dividend focused. Um, and I think any of those would be great places to look. But I think you're off to a great start so far. So good job. Um, Oh yeah, Korean cardboard. Congrats on the side hustle. Looks like it's been doing really well for you. Yeah, thank you. I'm guessing that you're talking about I'm guessing you're talking about the Walmart store, and it's been pretty crazy. I know I was putting out monthly updates on that for a while. I kind of stopped doing the monthly updates because, truth be told, I didn't really have too much to say. So I'm going to start doing quarterly updates for the Walmart store. And so sometime in January, I think I'll do like a Q4 recap and show you guys my sales and everything for the full year of 2025. And I'm looking at my store right now, and I'll even show you guys. So far, let me see if we can do this. So far, year to date, which is basically from the end of April until now, my store has done almost $21,300 in sales. And hopefully let me turn the brightness down here so you can see that. Hopefully it'll focus. Yeah, you guys can see that right there. Shoot. I'm sorry, guys. Okay. No, phone. There. The brightness was no. Goodness gracious. I really want to show this to you guys. So let me do that. This is a struggle. This is not going to work. Goodness. Okay. Well, yeah, you'll just have to take my word for it. Here. Can you see that? Is it going to focus? Gosh, this sucks. Okay, $21,279.10. So yeah, it's been really good. I'm really happy with the results. I just sent in some more money 2 days ago for more inventory. So it's been a really good thing. I'm really happy that I started doing it. And I think out of that, 21,000 or so, I mean, I think I'd have to look, but I think my profits have been at least like 5 or 6,000 of that. So maybe possibly even more. So I'd have to go back and look, but it's been really good. Mark here says, do you watch any financial television? Not really. Sometimes I will tune into CNBC actually through the Schwab app. They actually, if you go into the Schwab app, I don't know if you can do it on desktop. I've only been able to see it on the app. I need to figure that out. And let me know in the chat if you have any insight on that. But in the Charles Schwab app, if I go over to the markets tab, there's actually the live CNBC broadcast. So sometimes I'll have that playing if I'm, just, doing stuff around the house or whatever. Sometimes I'll just have that on the background. But truth be told, not really. It doesn't really do much for me. Okay, so as far as your guys' investing goals, Tim here says he's trying to get to 5,000 in dividends by the end of the year himself in the taxable account. Nice. So is this $5,000 paid out to you, or is this like a projected annual income of $5,000? Let me know. But either way, I mean, even if you got $5,000 this year, good job. Great job. Okay, there you go. 12K by the end of year 2026. That's a huge jump. Time to get comfortable with rice and beans. Yeah, there you go. There you go, Seth. That's awesome. Closing on my house December 10th. Congratulations. Going to be slowing down on investing for a bit. I don't blame you. Get settled in the new house with the new expenses. I totally don't blame you. Good job. Congrats on the house. Victor says, just max out my Roth. It's so hard with the cost of living these days. I know, Victor. I feel you, man. But you're on the right path. You're doing what you can. And at the end of the day, like, anything's better than nothing. So keep up the good work. There we go. Lobster. So far in 1 year, I've hit basically $5,300 in the portfolio with $1,000 in gains. Good job. I think my next goal is to achieve around total value of 15K. Yeah, you can do that. Absolutely. Great job. There we go. Okay, Anders, 2026, money sitting ready for Roth IRA since I have to do a backdoor Roth. At about 16K in realty income and 8K in mid-America apartments, max out 401K. Besides that, maybe pay a few extra K on the mortgage. Nice. Yeah, so what's this question here? So Rourke says, how do you look at funds, a mutual fund? A mutual fund may pay in December of each year. I have a few big ones that seem to confuse my dividend tracking as they are so large in December compared to the rest of the funds. Yeah, I get you. And truth be told, I wouldn't worry about that too much. My opinion is that whether a stock or an ETF or a mutual fund, whether they pay monthly, whether they pay quarterly, whether they pay just once a year, it all works out to be the same either way. Getting $3 every single quarter is the same thing as getting $12 once a year. So personally speaking, I don't really, fret over it too much whenever they pay the dividend. They're paying it either way. So you're going to get that dividend either way. It's nice to have it, consistent and regular, like once a month, every quarter, whatever. But at the end of the day, it truthfully doesn't matter. Not at least in my opinion. I know some people pay a bit more attention to the payment frequency or the payment schedule, but I wouldn't let that sway your investing decision. That's just my personal opinion. Yeah, this is a good. Law says develop a better screening process and increase my dollar cost average. I want to invest 125 to 150 a month. That's great. That's a great goal. You can do it. And I think it's good too. It's good to I think it's good to challenge yourself to invest more, to continue investing more. I think if you set that goal for yourself and kind of turn up the financial pressure a little bit on yourself, I think that that could maybe carry over into other areas of your life. Maybe it makes you work a bit harder at your job, or maybe look for a higher paying job or a better situation there. So I think that setting those type of goals for yourself can have benefits outside of your portfolio too. Sir Dude Man says, I want to keep being able to invest next year. I'm sure you will, man. And I hope I'll be able to keep investing. Well, yeah, you should certainly be able to. If nothing else, man, I'm sure you'll have dividends coming in that you can reinvest. So okay, we'll look at Clorox for you, Tony. Good one. Good. There we go. Look at this, guys. So Dr. Tax PR. I'm a recent subscriber. Thank you so much. And I love your content. 1 year of investing, portfolios at $56,000 in 1 year. Great job. And annual dividend income of about 2,400-ish. Okay, nice. So, that's a bit under a 5% yield, somewhere between 4.5, maybe 4.7, 4.8%. Goal is to be at $4,000 by the end of 2026. Well, man, I will say if you're already at 56K just in your first year, I think that and $2,400 of income, I think that you'll probably more likely be at over 5,000 by the end of 2026 if you just keep going at that rate. So great job. Nice, Josh. Hello from Melbourne, Australia. Been watching your videos for ages. Thank you, my friend. That's awesome. All the way from Australia. Thanks for all the knowledge you share. Man, that really means a lot. Thank you. I'm really appreciate you guys tuning in and listening to my gibberish. It means a lot. It really does. There we go. Caesar. That's what I like to hear. Yesterday was crazy good for us. Product hit our store in September 23rd, and we've already sold $3,500. Great job, man. That's huge. That's really good. Patrick says, I'm going to just miss 100K in total returns. Holy cow. And 70K in total dividends. Nice. Can we check SBS? Which one is that? SBS. Oh, yeah. Which one is that? Because that's pulling up some sort of like Brazilian company when I pull it into Snapstock. So yeah, let me know what that is. Oh, nice. Just finished Psychology and Money. Great. Yeah, I actually just got his new book, The Art of Spending Money. I have not read it yet. I've been reading some other things, but I'm excited to dive into this one. And I'm glad you liked Psychology and Money. That's a great book. And by the way, guys, I've got 3 questions saved that I'm going to go through. I'm just spending some time getting caught up here in the chat. Yeah, this is a good question. So I just finished The Psychology and Money. Love Morgan Housel. Was wondering what book you suggest next. So if you like The Psychology of Money, you'd also really like his next book, Same as Ever. Let me see if I can find it. I'll get a couple books here. So yeah, this one. I'm gonna recommend 3 books. Okay, 3 books for you. Okay, so the first one I just finished reading this book. It's kind of a finance book. It's actually a biography, but I loved this book. This is one of the best books. This might be one of the best books I've read this year. This one is The Richest Woman in America by Janet Wallach. I think is maybe how you pronounce her last name, but it's about a lady named Hetty Green who lived during the Gilded Age. So the late 1800s, early 1900s. And Hetty Green was basically like the female Warren Buffett of the time. Really interesting lady, very successful investor. And just a really well-written book that gives you some great insight into just like, really good investing strategy, really good investing chops this lady had. but also gave you some really interesting insight into what kind of the country and what it was like to be an investor during that time and the things that people were investing in. This was like, right in the midst of the big railroad boom, and really interesting to see how people were investing during that time, what they were buying, how they were behaving. And I don't know, it actually kind of ties into this book here, Morgan Housel's Same as Ever, because there's just a lot of similarities. You'll see like in the behavioral, how people were behaving during this time, as far as like their investments, not too different than what we've seen today, what we've seen like during the dot-com boom. Um, human beings just don't really change throughout time. And that's really the premise of Morgan Housel's book, Same as Ever. It's about a lot of things that just really don't change, as far as like human behavior, especially like as it pertains to finance. So I'd recommend both of these books for sure. The third book, which is straight investing book, is What I Learned About Investing from Darwin. This was a fantastic book, and it basically took, different themes in evolutionary biology and applied them to investing. Um, and this was probably, if I had to recommend one investing book, it would probably be this one right here. This was another, I read this one last year. I think, let me see. I've got yeah, I read it in December of last year. I finished it last year. And this was also one of the best books this was probably one of the best books I've read since I started like reading seriously, for sure. So I'd recommend any of those three. I'd recommend all of those three, get them all at once and just go through them one by one. And then also, nah, we'll just leave it there. I don't want to throw too much at you guys. Okay. Yeah, Vasco, we'll look up that SBS one too. Yeah, I'll save that one. Okay. Oh, yes. You know what? What was maybe it was on Instagram. I saw someone talking about this book um yesterday or 2 days ago somewhere online. And I think, correct me if I'm wrong, but that one came out like, didn't that one come out like 1929? Rem This is Reminiscences of a Stock Operator by Edwin Lefebvre. Yeah, and maybe I'm wrong, but no. Wait. So, oh yeah, yeah, yeah. Okay. Check it out. So, although it was first published some 70 years ago, it takes on a crowd psychology, excuse me, in market timing. Okay. Yeah. How many pages is this one? 288. So not too bad. I'll add this one to, I mean, that looks like a rough cover. Maybe we can find, I'll add that one to the list anyway. Yeah. Okay. So, okay, guys, let's go through some of these, comments here in the chat. Looks like we've got, okay, my wife just finished Retire Often. Nice. How did you guys like Retire Often? And by the way, we're going to, over on the deep end, we'll be doing like a book club get together sometime, maybe in the next couple of weeks. Ari and I need to talk about that. We need to get something on the books for that. But yeah, for the deep end, this was like our first book. This Retire Often book was the first book that we are reading for our deep end book club. And pretty soon we'll be doing a big like Zoom call where everyone who wants to participate and who actually read the book, we're going to get together and talk about it. And then we're also sometime after that going to have a chat with the author. So anyway, so let's go over here to Korean Cardboard. He wants us to look at Goldman Sachs. Think they're solid, but would be buying near its 52-week high. You know, it's funny. I was looking at my stock pick scoreboard the other day, and I think I mentioned Goldman Sachs back in. Let me see if I can actually pull it up. So let's go over here. I mentioned Goldman Sachs. Let me zoom in a little bit too. See if you guys see that. I think it was back in 2023. I mentioned Goldman Sachs. Where was it? Let me know if you see it. It's got to be like right in front of me. Oh, it wasn't Goldman Sachs. It was Morgan Stanley. I had him confused. I mentioned Morgan Stanley. That one's up like 135%. That's really nice. Okay, so looking at Goldman Sachs, got it right here. Wow, really solid year, up 40%. Okay, pretty low starting yield, but nice, pretty nice dividend stats, low payout ratios, nice dividend growth history. Still pretty high free cash flow yield at 5%. And this one's a little bit funky because it's a bank basically. So this might be kind of tough to gauge the data on it, but sales and earnings per share have grown pretty well. Yeah, obviously they're gonna have a lot of debt. So I don't know. This really isn't much in my wheelhouse, so I'm probably not the best person to ask about it. But I mean, the dividend stats are easy, like low starting yield, but very nice dividend growth. I think that looks good. Dividends really well covered. They're buying back shares like it's nobody's business. You could maybe make the argument that now's not the best time to be buying back shares, but nonetheless, they are buying back shares. And when you combine this, 2% average buyback yield, I guess we'll call it, they're reducing their shares outstanding by about 2%, paired with the dividend yield of 1.4%. That's a shareholder yield of, what is that, about 3.4, almost 3.5% right there. So yeah, I don't know. I don't really know what to make of this one, to be honest. I'm really not the best person to ask about it, and this may not be the best platform to look at for this one either, because banks are a little bit funky. So next up, Tony wants to look at Clorox. Yeah, that one will be a bit more straightforward. It's been a while since I've looked at Clorox too, but I do remember last time I saw it, wasn't super impressed with it. It is down quite a bit in the last year. It looks like it's down 33%. A lot of red flags. The snap score is pretty low. Low growth, low margins, debt's decent, low capital efficiency, nice dividends. Valuation's not too bad though. Looks like we're getting a near 5% free cash flow yield and about a 17 for the PE ratio. So that's not bad. Not too bad. Yeah, sales have definitely stagnated, actually have declined in the last few years. Earnings per share and free cash flow per share have really dropped off. So those would be a couple red flags to me. Yeah. Debt's not looking to be in bad shape though. I mean, if we're going by this, the net debt to free cash flow is about 5.6. A little bit above where I'd like to see it, but this is not the end of the world. It is, lower in the trailing 12 months, below that 5 number that I like to see. Looks like interest coverage is in a good spot, 11.2, or 10.2 if we're looking at the most recent year. And what else? I mean, low starting yield right now, 1.15%. Is that right though? If we go over to Seeking Alpha, because I know there was this drop off right here, but I think that's just an error on our end. Okay, so the starting yield's actually 4.6%. Okay, so that's way higher. Yeah, 4.6%, 2.5% growth rate, and then almost 50 years of dividend growth. High payout ratio, though, which may not be too surprising considering the drop in earnings and also the drop in free cash flow. So yeah, I don't know. The dividend coverage does look a bit concerning at this point. If we switch to the quarterly view, what does that tell us? I mean, for the most part, I don't know what's up with this. I'm going to disregard the Q1 2026 for now, but for the most part, the dividend is covered by the free cash flow. There's been a couple of quarters in 2024, or 2025, there was only one quarter, Q2, where they paid out more in dividends than they had in free cash flow. It's kind of a similar story looking at the earnings payout ratio, except it was Q1. They paid out more in net income. And then, yeah, pretty low returns on invested capital and return on assets and stuff like that. But this is a very mature business, so not too surprising. I don't really see much that interests me here. Yeah, the starting yield is high, that 4.6%, but to me, that's about it. I mean, nice dividend growth history as well, but beyond that, not super interesting to me. That's funny. She loved it. She now wants to retire at 45. She just turned 44. Man, I don't blame her. I do not blame her. But that's cool that both of you guys are into this stuff and are on the same wavelength in that department. I think that's important. That's really cool. Yeah, Joey says, I wish I liked reading as much as you guys. I can't do it. It makes me sleepy. Man, I totally get that. And I was like that for a long time. And there's some books, man, where I still feel that way. Like I've read a few stinkers for sure. And if you're not reading something that you enjoy, it's definitely going to put you to sleep. And so when it comes to reading, which I actually think is an important thing, not just for investing, I mean, certainly for investing, but even outside of investing, I do think it's important to read, especially in a world where, I mean, our attention span is being commandeered by so many different things. And so I do think that reading helps protect against that. It's one of those things that you like when you're reading, you have to be focused on what you are reading, what's right in front of you. That's the only way you're going to do that activity. And so, at least for me, it forces me to put my phone to the side, put it somewhere else out of reach where I don't have to pay attention to it. It's not even like a temptation. And it forces me to just sit and focus on what I'm doing right here, right now. And I think that we need those things in our lives sometimes. And so reading is a good thing for that. And the key is to find stuff that you actually want to read. That's where you got to start. And sometimes that's hard, especially if you're getting book recommendations from me or other people online. You hear about a lot of the same books. You'll hear about The Psychology of Money. You'll hear about The Intelligent Investor. You'll hear about One Up on Wall Street. You'll hear about the normal, the usual stuff. Don't feel like you need to read those. Like if those are not interesting to you, just don't do it. Find things that are actually interesting to you, and let that guide your decision making when it comes to the books. So. Speaking of the devil, my favorite books so far have been One Up on Wall Street and The Little Book That Beats the Market. I'll be honest, and I probably need to go through it again because it's been probably 3 or 4 years out. It's probably been 4 years since I've read One Up on Wall Street. It didn't grab me the first time I went through it. I'll be honest, it really did not do it for me. But it's been a long time, so I think I need to give it another shot. Yeah, JJ says Die with Zero is one I want to read soon. Yeah, I've heard good things about that one too. Yeah, do you have an opinion on Bros or SZKMY? I've never heard of SZKMY, Suzuki. But Dutch Bros is interesting. They don't pay a dividend and they're a direct competitor to my darling Starbucks, which I don't own at the moment, but still love Starbucks. And you know, good on Dutch Bros. I mean, they've really done they've really been a solid grower. The earnings per share has we're still looking at the quarterly. I want to look at the annual. The earnings per share has really like done a total 180, and now they're actually generating free cash flow. So I really do like to see that. It looks like margins are kind of starting to balance out. The net margin and the free cash flow margin are continuing to improve. So we'll see where those settle out. But yeah, I think it's interesting. It does look like they've taken on a lot of debt. Looks like they've taken on a lot of debt, but they are trying to grow super fast. I would say that that's maybe a red flag at this point is just how much debt they've taken on for that growth. So we'll see how that plays out. But no surprise, being a dividend investor, I am pretty averse. Is that the right word? I'm pretty averse is having a strong opposition to something. I'm so lame. I actually looked up the definition. I'm pretty averse to owning things that don't pay dividends. And it's not because I think that they make for bad investments. I mean, there's plenty of great companies out there that don't pay a dividend. But for me, I like having that cash-based relationship with the companies that I own. I like even if it's just a little bit, I like that sliver of accountability from the management to the shareholder in the form of that dividend, Um, that's important to me. That's something that I like to see. And so, and that's, when you get to the root of it, that's really why that's really why I don't own any stocks that do not pay dividends. That's a big reason. Like at first it started because At first, it started because I just liked the idea of getting that passive paycheck. I liked just being paid without doing anything, you know? I still do. I like it now today more than I did when I first started. Um, but as I've kind of gone deeper down this road and have had more experience in this investing game, I just I think there's something philosophical about the dividend that's important to me. I mean, I kind of just described it, but yeah, I think that even if it's just slight, even that sliver of accountability, I do think it, I do think, I do think it creates at least some sort of expectation between you, the shareholder, which in effect is the owner of the business, and the people who are running it. I think the dividend is at least like a slight reminder that, hey, you are working on our behalf. It's not, you know, it's not the end all be all for that, but I do think it helps. So let's see. Um, yeah, no exposure to Bitcoin. Sorry, guys. I'm just getting scrolling down, getting caught up in the chat. Yeah, Coop, I kind of touched on this. I touched on this like at the start of the stream. One of the first questions I got was about growth versus dividends. So go back to the start of the stream, like it's in the first few minutes. You'll see the question like on the screen, kind of like this one is right now. Um, so check that out. I answer that question there, but the gist of it is the TLDR is the two are not mutually exclusive. You can have both at the same time, and I explained why at the start of the stream. But great question. I appreciate the question. Um, so a couple more questions here, guys. Justin wants to know, what are your thoughts on the S&P 500 for the rest of this year? Truth be told, I don't really have any serious thoughts on it. I don't have any predictions about what the stock market is going to do moving forward because I just don't know. I really just don't know. I do think, however, generally speaking, I can't help but think that at some point, with I don't know if that's going to happen in the next month or the next year, but at some point, I think something's got to give, and I think at some point we will be in for like a more serious downturn than just a blip like what we saw, in April of this year. I feel like another 2022 type year where the market's down for the whole year. I feel like something like that has to be around the corner. I could totally be wrong. It could just be gas. Usually with me, that's a safe assumption. So I don't know. I really have no idea what the stock market is going to do. I do know, however, that no matter what the stock market does, I'm going to continue buying the VOO, which is the S&P 500. I'm going to continue buying that every single week. I'm going to continue buying SCHD every single week. I'm going to continue adding money to my brokerage account every single week and deploying that however I do it. So at the end of the day, I'm just going to keep buying no matter what's happening and reinvesting those dividends. So okay, we have one more question from Vasco. So he wants us to go through SBS. It is that Brazilian company. Says it's like a Brazilian utility company or something like that. Okay, so let's jump back over here. So SBS, yeah, look at that, quite the name. Really high snap score though, like solid growth, high profits, debt's not bad. Dividends looks like they maybe have cut the dividend based on this. Really solid share price performance. I mean, crazy financials, big jump. I mean, very consistent sales growth, very consistent earnings growth since 2020, and just like explosive these last couple of years. So that's pretty interesting. Big jump in debt. Looks like the net debt to free cash flow is still very low. Interest coverage looks to be in a decent spot. I don't know what's going on with the dividends. I mean, it's obviously a company that is not based here in the United States. So their dividend policy is probably a bit more loosey-goosey. Whereas here in the States, if a company issues a dividend, they plan on maintaining the dividend at its current rate or growing it over time, usually is the intent. Outside of the US, like I said, it tends to be a bit more loosey-goosey. The dividends tend to be a bit more variable. So the policies are different. So not all too surprising to see this dividend all over the place. Now, if this is true, it has a 0.8% starting yield. You know, I don't know. I mean, it's a very solid growing company, but it's already up 80%. You're getting a low starting yield on a company that's already seen such a crazy run up. I don't know enough about the company either, and the returns on invested capital, truthfully, are not that like stellar. They're okay, like 15% good, but so I don't know. I don't know that I have a serious opinion about this one. I like the growth stats, but that's about it. And we are now at the top of the hour. Holy cow. Yeah, no problem, Vasco. Interesting one. Any last questions from you guys? It's the top of the hour. We'll wrap it up here in just a moment. What do you guys got? Any last words? Coffee's cold now. While I'm waiting for you guys to submit anything here in the chat, just a quick reminder, Snowball Analytics has their 30% discount going on right now. Right after this stream, I will go back in the pinned comment. I'll add a link to that so you can get that discount. And I'll also add a link to where you can see my full portfolio on Snowball Analytics. You'll see all my holdings, all of the performance of each position. You'll see all the dividend income, all my trades, everything that happens in real time as it occurs. You'll be able to see through this link. So you guys will be able to check all of that out. Okay, few good questions. Mama's good. Everyone's good here. Baby is 8 weeks old today, which is crazy. Time has definitely flown, but everyone's good over here. Thank you for asking, Eddie. Good to hear from you, man. Okay, if markets come down for something like 2022, do you think dividend stocks become more advantageous? I certainly do. I absolutely do, because people will be freaking out when share prices go down, but dividend investors, we're going to be calm, cool, and collected because, even though share prices might be coming down, we're still getting those passive paychecks. And that's going to be very attractive to people who don't currently have exposure to that, I think. And if something like that does happen, if we do see another 2022, then dividend paying stocks should see much less of a drawdown than the rest of the market. And just for my portfolio back in 2022, I think the S&P was down something like 18 or 19% for the year. My portfolio was down like 0.5%. So like basically break even for the entire year. And so I definitely think that dividend stocks or dividend paying stocks, which are just big profitable companies, blue chip companies, will shine for sure. Disney stock, I went through this in the last dividend happy hour, and I don't want to spend too much time on it because it is time to wrap it up. Truth be told, I mean, Disney's okay. It's just okay. It's not, I'm not super stoked on it. I'll be honest. I went through it very in depth. It was either the last dividend happy hour, episode 153, or it was like 152, but it was very recently that we went through the stock from top to bottom. Is your SCHD, is your Roth still full SCHD? No, my Roth is a split between VOO and SCHD. Yeah, I'm curious about how to set up something like your Walmart business for myself. That's my question. So first and foremost, you do have to have an LLC to do that. I already had one just because I run all my YouTube stuff through an LLC, so that was easy. But then once you do that, it's basically just like an application that you have to fill out online through Walmart. And once they approve your store, you can just start sending in inventory. But I will say, like and I know this has happened to a few other people who created stores. My application was actually denied at first, which from what I heard from the Limits Express guys, who are the people managing the store, that's pretty common, but they were able to turn that around, no problem. So, yeah, I would definitely, like, if you haven't done so already and you are interested, set up a call with them, ask them some questions, get a feel for it, see if it sounds like a good fit. But it's been a good thing for me so far. So, and I know, and with that said, I do know some other people who have not had as good of an experience as I have. And I know some other people who have, so results may vary, I suppose. Hmm. Let's see. Man, that's a tough question. What do you think are the best REITs to invest in? I don't know. I think the interesting kind of the fun thing about the real estate sector, the REIT sector, is that there are so many different kinds of REITs. Like even just within that one sector, excuse me, you can be very diversified. You can go triple net leases, you can get the like the retail triple net, like the Realty Incomes or the Agree Realties. You can go experiential REITs like Vici Properties. You can go industrial REITs like WP Carey or Prologis or Rexford Industrial. You can go like housing REITs, apartment REITs like Mid America. So even just within that sector, there are so many different ways to be diversified. So I don't know. I don't know that I necessarily think there is a best one. There's a lot of good ones out there. And the ones that I own Realty Income, I own Vici, and there's office REITs too. I own WP Carey and I own Kilroy Realty Corporation. So anyway, guys, that's going to be it. Last question for you guys before I go. So obviously Friday, we've got a couple days ahead of us before we get back to the market. What are you going to buy next week? What do you have your sights set on going into Monday? Let me know in the chat what you're thinking about picking up. Maybe it's too soon to tell. Maybe it just depends on what happens next week. But let me know if you've got your sights set on anything good. And while you're at it, if you haven't done so already, be sure to hit the thumbs up button one time on this live stream. If you enjoyed the Dividend Happy Hour, if you had fun, or if have been having fun this last hour and 7 minutes, almost hour and 8 minutes, hit the thumbs up on this stream one time. Okay, so I see Vici, I see Blocks, VOO, Meta, Target, Energy Transfer, Meta, Deer, and Amazon. Nice. What else we got? More Vici in the second industrial stock. There you go. Watsco's a good choice right now. Rollins, by the way, is already up above $60 per share. It's stupid. Stupid Rollins. Go. Goodness gracious. Caribbean Cruise Money next week. Okay. Yeah, Kevin's going with SCHD. Broadcom. There you go. SCHY. Nice. Jeff's going with Vici. And Blake's going with Adobe. Nice pickups, guys. Nice pickups. Oh, and DGRW for Jeff, who's my Vegas neighbor. Jeff, man, one of these days we'll have to get together for like a beer or a coffee or something. SPYI, Meta, Walmart, Nvidia, CDNS. There you go. MasterCard and Visa, Sprouts. Okay, you don't hear that one too often. Nice. Okay. Cool. Well, guys, good picks. Great stream. It was fun to be back with you guys for a live stream. It's been too long. Every time I do one of these streams, I think I need to do more live streams because I love doing it. But it's easier said than done. Like during the week, just when putting together other videos or the newsletter itself, it's like, man, sometimes it is. And also like trying to get my workouts in, get my runs in. It's tough to find time to do extra streams, but I would love to. I really would. I really would love to. Yes, sir. I'm so down. Awesome. That'd be fun. Well, guys, I'm really going this time. Thank you so much for tuning in and hanging out with me. I hope you guys all have a fantastic weekend. Be safe out there. Best of luck to you in the market next week. We will be back for actually, guys, I think my parents are going to be in town next week. So I don't know exactly about a live stream next week. We'll figure it out. I'll keep you guys posted, but my parents are going to be in town. I think on Thursday they're coming and they're going to stay through the weekend. So, we'll see what happens, but I'll try and get a stream in with you guys one way or another. But anyway, you guys have a fantastic weekend. Thanks again, and I will see you in the next one.